As an accountant, I've seen small business owners make a number of tax mistakes that have cost them money. Today, I'm going to go through the 6 most common mistakes that I've seen small business owners make, and more importantly, I'm going to tell you how you can avoid them. Number 1 is they don't understand how asset sales work when it comes to a tax point of view. So it happens all the time that people go and sell a business asset and don't understand the tax implications of this. So if we buy a business asset and we claim it on our business, it's going to become a business asset, and therefore when it's sold, it's going to be taxable to us. This is happening a lot at this time of the year when people are looking at tax planning strategies. And for instance, they're coming in and they're saying, I bought a vehicle, I'm going to have this $40,000 tax deduction, and they don't take into account that they've traded in something on the other side. So let's use the example there that we've bought a vehicle for $30,000 a few years ago. Because of the instant write-off, we're able to claim it in full. So we've got this asset, and we're now looking at to upgrade. We want to buy a new car this year for $40,000, but we're actually going to be trading in that old car for $20,000. So where people go wrong with this mindset is they think, well, now I've got a $40,000 tax deduction, my profits are going to be way down, therefore tax is going to be way down. But they forget to add back on the asset sale. And this is because the asset has a $0 cost base because we've claimed it all. So we've now got $20,000 of income that's coming back in. We do have our $40,000 deduction because it's for 100% for business purposes, and we can claim the instant write-off at the moment. But really, our net result is only a $20,000 deduction, not the $40,000. So this obviously can make a massive difference because assets can be worth a lot of money. So when you're trying to do any kind of tax planning, you really need to take this into account. So just remember, if you are selling something you have claimed previously on the business, it is going to be taxable based on the percentage that you claimed previously. And you need to understand that when you're doing any kind of planning calculations. The second one is they don't keep their software up to date. So if you're using software such as Xero, you want to be reconciling this on a regular basis. And the reason for this is it allows you to keep on top of where your business is actually at, and it also means it doesn't balloon into too big of a job. So I've seen it too often where people don't reconcile and they do it once a quarter, and then they get stuck with this hundreds of transactions they're trying to reconcile that they don't remember what happened. So what ends up happening, people end up either taking the conservative route and putting them to personal expenses if they don't remember, or they start claiming things that they shouldn't have claimed. We end up with 2 different situations. We either end up underpaying tax and therefore being at a massive audit risk because we've claimed things we shouldn't, or we end up overpaying tax because we have missed out on genuine claims. So not only does it create a situation where people put it off and they just don't do it and it balloons out of control and potentially they lodge BASs or tax returns late, it also means that their tax position is likely wrong as well. It also makes it impossible for them to look at their figures and make decisions regarding their business. If you're not up to date, how can you know if you're in a profitable position or a loss position? By keeping things up to date and doing it on a regular basis, it allows you to know exactly where you're at. I think the best way to fix this is by putting habits in place. I personally do my reconciling every morning. It honestly takes me less than a minute because of the rules I've set up in Xero, and I know exactly what happens. It only happened the day before, so it's really easy for me to reconcile. So work out a habit that works for you, whether it's daily or at least weekly, and you'll definitely find you keep on top of it, it becomes a lot less of a job, and you'll be able to make better decisions for your business. The third one is very similar, but it's not reconciling correctly. So it's all well and good to reconcile regularly, but if it's not done correctly, you're going to create a range of issues for yourself. First of all, you're going to have unreliable data. So all we talked about previously of doing it regularly, if it's done regularly but wrong, we can't rely on that data. We might look at it and go, oh, we've made $50,000 profit for the year, but not realize that we haven't allocated some expenses correctly, and really we've only made $30,000 and the business is struggling. Or maybe it goes the other way, where it's saying we've only made $30,000 and we're thinking we're going to need to make some major changes to the business, but we've actually been putting personal expenses in there that we shouldn't have been claiming, and we've actually made $50,000 and things are actually ticking along nicely. So by not reconciling correctly, you've just got unreliable data, which can lead into those issues we've talked about previously, where maybe we then start claiming things that were personal and we get an audit done and we're going to fail because we've claimed things we shouldn't have. Or we've missed claims because we haven't put them through as expenses and therefore we're paying too much tax, which no one wants to do. You then also end up in the position where you could get to the end of the year, your accountant goes to do your work and says, this is a mess, I'm going to have to go back and recode everything myself, and suddenly your accountant bill is in the thousands of dollars. So not only could you cost yourself more tax, but you potentially could be paying more accounting fees and costing yourself a lot of money overall. You can simply fix this by, one, keeping on top of it more regularly so you have a better understanding of what's happening, but really understanding what are you actually reconciling. Do you understand how to reconcile it? and if you don't, ask the question at the time rather than just guessing. You also want to keep consistent with the way you're reconciling things. If you're allocating the same expense to the same codes on a regular basis, it'll make it much easier to either identify and then potentially fix an error, versus if you've got the same expense but it's gone to 5 different account codes, it makes it a lot harder to identify that because it's just creating a huge mess and it's potentially going to take a lot longer to fix. The fourth one is they don't look at their numbers prior to 30th of June. I think you should be looking at your numbers on a regular basis, but it becomes even more important as we get closer to the end of financial year. You want to be able to know your numbers and you want to be able to back that they're correct and then make decisions around those numbers prior to 30th of June to help maximize your tax position. I've talked about this further in a previous video talking about the benefits of tax planning, so go and check that out. But you really want to understand where are you at and is there anything you need to do by 30th of June to optimize this. This is a time limited decision. If you do it in July, it's too late, the year's already happened. But anything prior to 30th of June is still live. You want to make sure it's happening then and there at the right time. And you can't do that if you don't look at your numbers. So looking at your numbers on a regular basis helps you understand where things are at, and in particular, make sure you're doing it prior to 30th of June. Now, before I get into tip number 5, I'm trying to get to 10,000 subscribers here on YouTube by the end of the year. And I can only do that with your help. So if you're watching this and you haven't yet subscribed, please hit that subscribe button. It really helps me grow this channel. Now let's get back into the video. The fifth one is they lose their receipts. You hear it all the time. Oh, I bought this, but I don't have the receipt. I can't remember how much I paid for it, and people miss out on genuine claims. The easiest way to lose out on tax is by not claiming things you're genuinely entitled to, and receipts are a key component in this. You want to make sure you've got a system in place so you can store your receipts so you don't forget them and they don't get wrecked. I've seen too many times where people have a receipt and it's completely faded and they don't know the amounts anymore, and therefore they miss out on claiming something. So make sure you're looking at, well, what system can I put in place so I know my receipts are stored safely, securely, and I don't forget them. So whether you're going to look at something like a Google Drive account where you're uploading them to there, or maybe you're utilizing software if you're a business owner and you're attaching them to your Xero documents, or even using something like HubDoc or Dext where you can take photos and send them into your accounting software. Even in a worst case, pull out your phone, take photos of them and store them in there. But make sure you probably do some sorting because some of us have 10,000 plus photos, so we probably want a bit better system than that. But you want to make sure you're doing something with your receipts on a regular basis. And the sixth one is they don't keep on top of their ATO debts. I've seen it happen too many times where people are just always chasing their tail and they're always behind and they never seem to be able to catch up. For instance, if you owe $30,000 and for some reason that year you put nothing away and at the end of the year you've got a $30,000 debt that you can't afford to pay, so maybe you start putting a payment plan in place and you're paying that off, and then it gets to the end of the year, you might have paid that off, but now you've got $30,000 from this current year that you weren't paying, so you've still got a $30,000 debt and you're just chasing it because you're trying to pay $60,000 in one year instead of $30,000 in each year. So you want to try and keep on top of things on a regular basis, but if you can't, then communicate with the ATO, put your payment plan in place, but make sure you're putting away enough funds to not only cover the payment plan, but to cover any new debt that's arising. That's the biggest area where people go wrong, is they pay off the old debt, but they don't then have enough to meet their ongoing obligations. And that's when the ATO get frustrated with you and you potentially default on payment plans. The way the payment plans work is they're contingent on you meeting the payment plan and also meeting your new tax debts. And if you can't, communicate with the ATO. They're pretty good to deal with, but you have to keep in touch with them so they're aware that yes, you're aware of the debt, you're doing your best to keep on top of it, rather than just ignoring it and pretending it will go away. Now you're on top of those 6 areas, it's time for you to learn out some of the tax secrets that the rich and powerful use to help minimize their tax, and I talk all about it in this upcoming video.